All right, guys, welcome back to cryptojiri. Today we'll be talking a lot about blockchain, as well as GrayScale and Mark Cuban, what they think about Bitcoin and how much they are technically buying as of today. Right. So first thing we'll take a look is Saudi Monetary Authority pumped sum of $13 billion bank infusion using blockchain. That's a lot of money. So let's take a look on what Saudi Arabia is trying to do with all of that money. So the Saudi Arabian Monetary Authority, SAMA, has distributed cash to local banks over blockchain. On Monday, the central bank announced it had deposited part of a recent banking sector liquidity pump through blockchain technology after injecting 15 billion riyals, $13.3 billion into local banks on June 1st. At the time, SAMA said banks maintain an average liquidity coverage ratio (LCR) of 201%. It's actually really good, meaning Saudi banks had more than enough cash on hand to cover short-term obligations. The banking sector's average capital equity ratio, essentially a measurement of financial soundness, was at 18.6%, placing the banks in line with the kingdom's long-standing target of between 18 and 20%. SAMA did not disclose which banks received liquidity injections over blockchain or how much of the overall package SAMA had pumped across the blockchain. Furthermore, it did not state what blockchain platform it had used. Well, coding a blockchain is not hard. It does not take long, so I'm guessing they use their own blockchain platform, right? I wouldn't be surprised if they make their own, as well as my suspicion, I'm guessing, is they use Western Union, but they basically built a blockchain platform for Western Union, and that's basically how they transferred it. Nothing too crazy, but it is a good thing that people are using a lot more blockchain, which is going to be creating a lot of jobs in the fintech space, right? So if we do take a look, after 10% difficulty drop, Bitcoin miners are back in the game, guys. So, right, a lot of talk before the Bitcoin halving that, miners are going to get out of business just because they can't afford their electricity, as well as other maintenance. But, right, since it dropped, they could still make their money, but once it goes over a certain price, below a certain price, they'll not mine as much as before. Right, so just weeks ago, there were fears that miners had begun to capitulate. Bitcoin blocks were slower than normal. Very true. I dealt with it myself, which sucks, but hey, that's just how it is. Transaction fees skyrocketed and data analysts observed large outflows from miner wallets. What happened was a block reward halving, which decreased the revenue of miners by around 50%. That is a lot. After the halving in midday, Matt DeSouza, a hedge fund manager and the chief executive officer of Blockware Mining, said that 30% of Bitcoin miners were at risk at extreme capitulation. As blocks slowed, this assertion was proved correct. But after an automatic adjustment to the Bitcoin network difficulty, which determines how hard it is for blocks to be mined, miners are back in the game. And that may show that there's upside in the works of embattled markets. So, you hear it there, guys, which is a good thing, right? Fast transactions, but in the long term wise, I wouldn't be surprised if a lot of Bitcoin miners will find a way to mine Bitcoin for a cheaper price. They relocate, etc., etc. So I ain't too worried about there. But hey, things get slow, things get fast. So we'll go from there. But the reason why I'm Twitter, because I couldn't find it on Bloomberg, but hopefully, it's factual because everyone should know this by now. But GrayScale did buy over 10,000 worth of Bitcoin in the last 8 days. For reference, only 1,700 were mined in that period. Think about it. So they're basically buying bulks, and just because they bought it doesn't mean it's instantly, guys. It takes a very long time to transfer that amount of Bitcoin as well as mine that Bitcoin. So that's why I'm also bullish on Bitcoin, because one day that's going to confirm on the blockchain and the price is going to blow up. and we won't even see it, not even in our charts, nothing like that, because it is news, right? But to take a closer look on it, Grayscale reveals why it's buying up so much Bitcoin. Grayscale Investments is seeing surging interest from hedge funds and other institutional investors for its cryptocurrency trusts. Here's why. Right, in brief, Grayscale total assets under management has risen to $3.8 billion, a nearly 50% increase over the year, right? 50%, and it's mostly Bitcoin. So that's a very big, awesome check mark. Most of this buying comes from institutional investors seeking exposure through 401k and pension plans, which I don't think it's traditional ones, because I know Grayscale just started up their Bitcoin 401k as Bitcoin pension plans. So we'll see what they're going to say. Furthermore, a fair number of traditional hedge funds are jumping on board too, as institutions are warming to Bitcoin as a potential hedge for rampant monetary stimulus. Business is booming for one of the Wall Street's go-tos for Bitcoin exposure. Hedge funds and other financial institutions have poured $1.7 billion into Grayscale Investments Bitcoin, which I would say that's basically of the 50%. Cryptocurrency funds, according to the interview with Ray Sharif Askar, Director of Investors Relations, Grayscale. Sharif Askari went on CoinScrum Market podcast to discuss Grayscale's soaring volumes. According to host Nisa Amulis, the crypto broker in custody has $3.8 billion in assets under management as of June, a significant jump from 2.1 in AUM in May of 2019, and even the 2.2 billion in AUM in March. So basically, they've had a lot, which is a good thing. I'll put this article in the link in the description so you guys could read more about it. I'm just gonna give you guys a whole summary of what is going on. But not least, Mark Cuban says Bitcoin can be a store of value. So this isn't really major news or big news, just because a lot of people do know Mark Cuban does support blockchain a lot. But he's a little bit eerie about Bitcoin. He does own a little bit, nothing too crazy. I know some of the other Shark Tank investors do have Bitcoin as well, but nothing like over $100 or $1,000. But Mark Cuban is like the most heeled into like blockchain and all that stuff. So let's take a look on what he thinks. Mark Cuban said that Bitcoin can be stored of value, which is very true, just like gold, but it's not a useful alternative in the US dollar, he said. But in further comments, he added that he doesn't think Bitcoin is a good idea, right? So like I said, right, he's really into blockchain, but like I said, he's not really into Bitcoin as much. So let's take a look on why. In a Twitter spat with Bitcoin enthusiasts, most notably Preston Feisch, Cuban took part the argument that Bitcoin could one day replace the US dollar. Though it can be a store of value, he said, Pish is wrong about the fungibility, I can't say that word, fungibility, okay, of BTC and its ability to impact society as a replacement for the current system. So let's take a look on the tweets. Honestly, no one knows yet. Could you have predicted Uber at the outset of the internet? Maybe you could, but that's not the norm. Why can't Bitcoin be a value layer over our world? Value flowing as easily as bits and bytes do now. It opens up the next level. And Mark Cuban responds, it can be a store of value, but the conversation started with the challenges of the current Federal Reserve System. He isn't wrong about the system, but he is wrong about the fungibility of BTC and its ability to impact society as a replacement for the current system. For Cuban, the logic of tokenomics fails to answer the following questions. He tweeted, how does the inflation of BTC from supply and demand impact those without assets and those trying to acquire BTC? How will markets be made for goods and services? How fractionalized can BTC become? He summed up with this thesis as a single hypothetical. I own 1M Bitcoin with $10 billion. In 50 years from now, what will I be able to do with it? Right? So basically what he's trying to say is that not everyone could acquire Bitcoin. Not everyone are into assets. Not everyone knows that Bitcoin can be fractionalized, which I do agree, right? Everyone knows paper money, right? Not everyone uses, but everyone that I know prefers, paper money, because they know, hey, government uses it, government wants it, and it's not a hard asset, right? Not a lot of people like investing, not a lot of people are into it. So that's basically what he's saying. If we basically throw the dollar away and go Bitcoin, people won't be educated on what is a hard asset, what is an asset, how to acquire Bitcoin, and stuff like that. So he's saying it's gonna take time, but he won't be surprised that Bitcoin will be a big worldwide currency. So I'll link this in the below. There is a lot of, actually, here, I'll read the tweets because these actually do sound interesting. My bet is this one. Preston says, I'll leave you with one hypothetical ion. Okay, so we just read that. Okay, there we go. It doesn't matter what denomination the revenues are in. You can't say dollars will lose value with Bitcoin increasing in value and not recognize the spread in conversion. Why would anyone take your dollars for Bitcoin? You are lost, completely lost in your own BS. Sorry. Dude, you're lost in your extreme BS. What am I saying is a business owner has the ability to immediately convert revenues into any currency they choose. Cash App, this is really, really simple stuff. The price of Bitcoin will do my talking. So, me personally, I do agree with Preston, just because the amount of technology we do have on our phones, we could literally turn our dollars into any currency we want in the whole world. Same thing with what Mark says. Mark is basically saying is, hey, not everyone's gonna have that dollar, right? But what Preston is saying is, well, if you're educated, you could change your dollar into anything you want, to whatever the business wants for their product, right? But not a lot of businesses will do that, because there's not a lot of people who know anything about hard assets, or, basically just not a lot of people are into technology, right? Which is kind of surprising. So that's basically what he was trying to say here. I'll put these articles in the description so you guys could check them out. But hopefully you guys did enjoy the video. Like, subscribe, comment, and as well, keep hollering, and I'll catch you guys later.